Personal finance journalist Maya Fisher-French joining us now. So we're talking about the settling of your bond. Yes, that's obviously what everyone's goal is if you own a property or you own a few properties, whatever it is. But even if you've settled your bond, you may still owe the bank money. Of course you do. The bank's always going to get more money from you, aren't they? Homeowners may not be aware that in some cases their paid up bonds will continue to attract fees unless, and this is important, Maya Fisher-French, we use the C word. We have to use the word cancelled in this case, because I think a lot of people get caught out, don't they?
Absolutely. So, you have many people, and I think, Gareth, you may be one of them, I'm certainly one of them, who has an access bond. And you're paying an extra money, and maybe your bond's effectively paid up in your access bond, but you want to keep the account open. You want to keep that credit facility available to you. And then you pay a 69 Rand fee a month to keep that credit facility available. And you don't cancel a bond because you still want to be able to access those prepaid funds. However, for many South Africans who don't have access bonds, they've just got ordinary mortgages and they've paid it off. And they just assume, well, it's paid off, right? So it's all closed and it's done. And it is not, because you have to, in order to cancel your mortgage, you actually have to get your title deed returned to you. And this costs between 5,000 to 10,000 Rand. So unless you have paid that amount of money to a conveyancing attorney and you've had the title deeds returned to you, you've had the mortgage over your bond, over your property cancelled, effectively the account is still open. And I think what people don't realize, that maybe they know they're supposed to do it, or they just don't have the money. For many people, just finding a lump sum of 5,000 Rand is very challenging, so they just leave it. But what they don't realize is that the bank may still be charging account fees on that, and it may even be attracting insurance premiums. For many people, they may have had life cover on that bond that they forgot about, or building insurance. So suddenly one day, a couple of years down the line, you think you're debt-free, you get a letter of demand from the bank. And this is not an uncommon situation.
So the word cancel, very, very important. It's almost when you finished paying off your car. Make sure that you become the owner of the car, not the bank anymore. You need to go and do the RC1 forms and all those good things, right? The bank still technically owns the car. I want to talk about the people, though, the ones who are very fortunate. And I think we need to be very clear. This is, I think, a very small number of people, unless you correct me, Maya, that are able to pay off their house bonds early. Because this might be an old wives' tale, but I always understood it that if you paid off too quickly, you actually get penalized by the banks because they're losing interest over the long term. I don't know if that's true or not.
That is actually historical. It's one of those things that used to be the case. So nowadays, what happens is if you are paying off your mortgage, so especially if you have an access bond, you can have those funds available. The account's still open. There's no penalty to doing that. The only time is if you are coming to cancel a bond, and that does. So again, what I've spoken about, you do need to, if it's early, it's not at term, you do need to inform the bank and say, well, I would like to cancel my bond. And if you give them 3 months, I think it's 3 months that notice that you need to give, and then you can cancel the bond. So it does depend a little bit on what your intention is. If you have an access bond, it's really not an issue, but it's when it comes to cancelling that bond, then you could possibly pay 3 months interest. But I mean, the banks, you need to speak to your bank. The banks can be, they're not often sort of, you've got to have that conversation with them and find out how they work. But it is really about, especially when you're selling your property, and usually there's that 3-month period of before it transfers to the other person's name. That's the notice period. So it's not really always a major issue.
Tommy and I talking off air because we knew we were going to be talking about this with you, Maya. So on the access bond, okay, so you've paid off the house, you've gotten close to paying off your house, but you don't have an access bond, and you think, well, it would be nice to do some home renovations. Maybe you want to sell the house. Maybe you want to make it for your forever home, and you want to go and build a double-story part of your house, but you don't have an access bond. If you didn't take an access bond option when you first bought the house, can you do it later? Can you add it on? I suppose it's an add-on.
Yep. No, absolutely. You can convert. And in fact, that's one of the things that you can choose to do. So say you have an ordinary mortgage, you've paid it up early, and you're saying, well, actually, I would like to be able to access those prepaid funds. You can definitely convert it to an access bond. So that's very important. I think that's the main thing, is speak to your bank. If you get to a point where your mortgage is paid up, Speak to your bank saying, what are my options? Do I want to settle this completely? Do I want my title deeds back? Do I want to convert it into an access bond so I can get those prepaid funds? If I have an access bond, do I want to keep it open so I can access those funds? Really important. But the point is, do something when you get to that point. Don't just assume the account's been closed. And also make sure you've gone and changed those debit orders. If you have insurance coming off the mortgage and you're wanting to close it, make sure you move those debit orders as well.
Yeah, it was
for the insurance.
Yeah, creditors will keep taking your money unless you stop them doing it. Just curious, as I say goodbye, Maya, I just thought of this now. If you do have an access bond and you have access to some of the money now, but you've been paying it off, or maybe you wait the full 20, 30 years, whatever the bond is it more financially savvy? Sorry, I hope I'm not throwing a curveball at you. Is it more financially savvy to use the house bond, for example, to put solar on instead of taking out a revolving loan or lending money? Is it better interest rates, I think is what I'm asking.
Absolutely, and that's why it's not a bad idea to convert to an access bond. Not that you're going to, and I don't go and use it for holidays, but certainly for home renovations, for solar, you really want it. Is such an inexpensive credit line. So I think it is obviously very, very worthwhile keeping that credit line open. But Gareth, I must just keep in mind that it still has to be paid off within the term. So remember, you have a 20-year home loan. If you've reached year 18, you're going to have a lot less access to credit, than you would have in year 15. And at year 20, they will close that facility. So you also need to be aware that it's not ongoing forever that you have access to that credit line. It will follow the term. There's one or two banks like Investec who will keep it open, but most of the banks, it comes to an end after 20 years. So you also just need to be aware of that. So anything you take out has to be repaid in whatever term is left of that 10 to 20-year bond agreement. And Gareth, before I go, I just want to mention one other thing. Obviously, one of the big issues with closing these or cancelling the mortgages is the cost of 5,000 Rand. For many low-income household, people, they don't have 5,000 Rand, especially pensioners. They're going to be listening to this saying, but I don't have 5,000 Rand. Speak to the bank. They do have programs to assist people who are struggling financially to close those mortgages. So please, or cancel them. So please do that.
Yeah, in the end, it's just talk to the bank. They're not as scary as you think they are. They're actually quite helpful if you can just take the time and go and speak to them. I had no idea that, Amaya, thank you. I had no idea, T, that you had to pay back the access bond. I don't want to call it a loan, but say you've taken some money out to put on solar. If you've only got 2 years left on your bond, you've got to pay it back within those 2 years. I didn't know that. I thought it was like an extended credit line that you then pay back, well, whatever terms it is, over the next few years. And that's very interesting. So don't get yourself jammed up by taking, if you've got a year left on your bond, go and take out 2 million Rand. But you're not going to pay back 2 million Rand in a year.
In a year.
That's actually I didn't know that. That's very important.
So one really does have to do the math and see what would be better, taking out an entirely new loan over a longer period of time for things like solar, or just staying with your home loan. But I really just marvel at the number of financial options that are there when you actually do have an excess bond, when you've got extra money in your bond, and you can maybe use that, as you say, to renovate or even to start a business if you wish, instead of going out and taking out another loan with a much higher interest rate. So one can really play around with that.
And that's why we have Maya Fisher-French. I would never have known that. So good advice. Don't say we don't teach you something on the show with Maya Fisher-French. I'm sure we'll touch base with her again later in the week.